Hello everyone, welcome back to RoyalT Empire Education. And for those who don't know me, my name is Tyrone. In our last video, we talked about the basic financials of the company. Now that we know the basic financials of the company, we will go deeper on these three statements. We have the balance sheet, income statement, and cash flow statement. So today we're going to cover what is the balance sheet statement and how it is beneficial for you to know this statement. What is the balance sheet and the financials of the company? The balance sheet of the company is the assets, liabilities, and capital of a business or other organizations at a particular point in time. The assets are equal to liabilities, adding the owner's equity. The liabilities plus the owner's equity are what we owe, and the assets is what we own. Our current assets are money that can be converted into cash within 12 months. This includes the cash and cash equivalents, which are the short-term commitments with temporarily idle cash and easily convertible into a known cash amount. Plus, accounts receivable, which is the money owed to the company by its debtors. Plus the inventory, which is goods and the materials that the business keeps to resell. All this would add to the total current assets. The non-current assets are other assets and equipment that is also known as investment purposes for the company. After looking at the assets of the balance sheet statement, we will look at the current and non-current liabilities. The current liabilities are added up to account payable, which is the money owed by a business to its supplier. Plus, accrued expenses are invoices and payments that has not been made but must account for. Plus, the deferred revenues are the money received for goods and services which has not yet been earned. Altogether, you would have the total current liability. Now, the non-current liabilities are the long-term debt or a loan that the company has taken. The total of the asset and liabilities is what makes the balance sheet statement. If you combine them together, it should be equal or positive in order to see the company is making money. When it is negative, this might mean the company is losing money. But it can be temporary because this is only recorded in a time of period. When I started to learn more about the balance sheet of the company, it was easier for me to pick out which company that I wanted to invest in. Of course, I don't only use the balance sheet in a company. There are two other statements that I use in order to figure out which company that I want. So stay tuned for those two more videos that I will talk about, which is the income statement and the cash flow statement. Now that we know what the balance sheet statement is, we will talk about the benefit of knowing this statement. What are some benefits of knowing this statement? Knowing the balance sheet statement can give you benefits such as predicting the company's performance. When you see the company is performing poorly for 3 months, you can conclude or predict that it will stay that way in a period. But if a company is performing very well in the past 3 months, it can be good to look at because this means it will perform well in the next period of time. Knowing this statement can prevent you from losing a lot of money and help you gain your maximum profit. Another benefit is that you know the risk that you are taking. This means if a company is risking something, you can look at the balance sheet statement and see how much they are spending or how much they are in debt. The loans that the company is taking might be necessary, but if it does not produce any profits from it, it can be seen as a big hole in a company. The more I read the balance sheet statement of a company, the more I see where the company is headed. The company can be headed for a big hole of losing money or stagnant, not growing as fast. Companies that are steady can be a good solid rock to buy into because your risk is much lower. But as I said earlier in my videos, the higher risk you take, the more reward you will get. In conclusion, we talked about what is the balance sheet statement and how it is beneficial for you to know this statement. The balance sheet statement out of these three statements will show you the snapshot or a period of time of the company's assets and liabilities. The other two will increase your knowledge of knowing which company you want to invest in. So stay tuned and hit that notification button if you want to see those two videos. Subscribe and like if you like what you're watching. And if you have any questions, comment down below and I will gladly answer them for you.